Good morning, traders. Good morning, traders. Today we want to discuss the first Elliott wave tips and tricks. The first Elliott wave tips and tricks. All right. In order to count Elliott wave, successfully, one should be able to know how, does the first Elliott wave form, the characteristic of the first Elliott wave, and you want to know, the first Elliott wave tips and tricks, because if you count wrongly the first Elliott wave, you are likely to count, the second wave wrong, and so on and so on. So the most important Elliott wave, in fact, is the first Elliott wave. By looking at the first Elliott wave, we can have a bit of idea, how the trend will even develop. Do you know that? We can use the structure of the first Elliott wave to focus the motive wave, the whole motive wave, which means from the first wave to the fifth wave. You know that? There is a video at 24 Elliott wave YouTube channel. If I'm correct, the title is how to forecast the financial market using the first Elliott wave, something like that, or how to predict the market with the first Elliott wave. By 24 Elliott wave YouTube channel. All right. So the internal waves of the first Elliott wave can allow us to forecast even the whole trend. Now, by knowing the structure of the first wave and the second wave, we can forecast the whole cycle, which means from the motive wave plus the corrective phase. Isn't it beautiful? That's great. So today I want to give you more tips and tricks. We have been talking about it for some time, all right? But I want to give you more tips and tricks about the first Elliott wave, all right? So on this chart, I'm watching, we are analyzing the Australian dollar, Swiss franc currency pair. So don't be put off because it's forex. You may say, oh, George, I trade only stock. George, I trade only commodity. Don't worry, all right? It doesn't matter, okay? What we are discussing here is valid for stock, for commodity, for future, for any financial instrument, for indices, for gold, for silvers, and so on, all right? So, we can see that one more thing I need to say quickly to forex traders is that if you are trading the Australian dollar Swiss franc currency pair, do me a favor, do not buy, the Australian dollar Swiss franc currency pair if the euro dollar does not give a buy signal. Do not sell the Australian dollar Swiss franc currency pair if the euro dollar does not give a sell signal. The reason is this Australian dollar Swiss franc currency pair is faithfully, positively correlated to the euro dollar. It is just another euro dollar. That's what I want to say to you, all right? Quickly, all right? So this currency pair has been going down since which year? 2012. I'm going to place a vertical line there. Here is my vertical line. It has been going down, and it has achieved the lowest low right here in 2015. So between the two vertical lines, price was forming lower lows, lower high. From this point onward, which means from the end of August 2015, these financial instruments start consolidating. So following our wave count guidelines, we know that sometimes we have a downtrend, all right? Price, usually you will see that price will go up, an Elliott wave cycle has ended, and then we see a consolidation, blah, 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 and so on and so on. And the first characteristic of the first Elliott wave is the wave that breaks out of the consolidation. So there was this move down. Now we see a consolidation. We want to know the consolidation level. It's consolidating roughly between 7466 and 6870. 07466 and 06870. Price consolidating. So as we see that there was a downtrend, now we see a consolidation. We are we Elliott wave traders are thinking that hopefully soon the fundamentals for the euro will start improving, because we know that this currency pair, the Australian dollar Swiss francs, is faithfully positively correlated to the euro dollar. So if the fundamentals are improving for the euro, all right, the Australian dollar Swiss franc will start going up like the euro dollar. If you look, you see that you look carefully. The Australian dollar Swiss franc is consolidating. Let's check on the euro dollar. Okay, as I'm talking about it, look, this is the euro dollar. What is it doing? It also went down, you see, the two vertical lines, and it is consolidating, yes or no? Is that almost the same thing that the Australian dollar Swiss franc is doing? Yes, it is. It went down, now it's consolidating. That's why I said to you, do not do anything with this currency pair if you don't see exactly the same thing with the euro dollar. All right? So for us that understand the Elliott wave, we are thinking that if the fundamentals start improving for the euro, we may see a breakout. Okay? For the Australian dollar Swiss franc, a breakout above the level of 7466. All right? But apart from that level of 7466, there is this resistance that I want you to put on your chart. I'm going to color it now into red, connecting this point and this point on my monthly chart for the Australian dollar Swiss franc. We have this bearish trend line. So the characteristic of the first wave is to break out of the consolidation zone. So we will expect it to break out. Probably you will find a resistance on the edge of the red line, but we will expect it to manage to go above, okay, that trend line. Usually, the mistake that a lot of traders are making, they are seeing the consolidation, they see the breakout, they call it straight away first wave, but the first wave can be subdivided into 5 waves, which means price will go up a bit, okay? It will meet a resistance, which can be this trend line, and then we'll pull back a bit before finally breaking the second resistance, which is the trend line, and then he may pull back again to retest that okay, trend line, okay, before going up. So looking at this chart now, it looks to me that this currency pair, if there will be a first Elliott wave, is likely to be a complex first wave, which means it will be blah, 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 blah. One move up, resistance, pull back, one move up, retest, and so on. Something like that. I doubt it that the first Elliott wave will be in a straight line through this resistance, because this is a major resistance trend line. Okay? All right? So, as we are talking about first wave tips and tricks, is the wave that breaks after the consolidation, but do not forget the resistance trend line ahead. A lot of traders get into trouble, or they even get taken out of the trade straight away because they are looking only at the horizontal resistance and they are ignoring the trend line resistances. Yes, it will break out of the consolidation zone, but be aware of the trend lines ahead, the bearish trend lines ahead. All right, you see now? The reason why we usually have a complex phase Elliott wave is because of the resistances ahead. So there's another resistance here. Pay attention to the vertical line. Let's color it now into pink. All right. So there's another resistance also here. You see? This one here. I'll color it again into pink so you can see them. Here it is. So the first move likely to be between to stop at the intersection between okay, 7835 and the right trend line, the intersection point between 7835 and the trend line. Watch out for it if there is a breakout. It will be better in an orderly market to have a pullback to retest the 7466. then a move to break above 7835, then a pullback to retest the 7835 before the last move that will push it up to this resistance at 8747. So, as we are discussing first Elliott wave tips and tricks, we want to know the resistance ahead, because the first Elliott wave is the signature of the first bullish Elliott wave, is the signature of the bulls, and the first bearish Elliott wave is the signature of the bear. So, a healthy, so to speak, a healthy first bearish wave will break below resistance, will break below support level, and a healthy first Elliott wave will break above resistance ahead. All right. So we also understand, following our guidelines, that after a downtrend and a consolidation, we will be expecting the first wave. But as the consolidation is still in place, we want to know whether the resistance ahead that the first Elliott wave will be breaking as it is underway. So there is another resistance again at 8258. So know whether the resistance ahead, and as the first Elliott wave is underway, one of the mistake that traders are making when they are counting the first wave, they always think that it should be in a straight line like this. It's not always in a straight line like this. Sometimes it's subdivided into a 5 wave, all right, because of many resistances ahead. All right, many resistances ahead. Another thing I need to say to traders is that the first Elliott wave is usually, starting because of the market sentiment. So the market sentiment generally, or the market environment, or the market sentiment will, create the first Elliott wave. All right? So market sentiment is bearish. Investors, professional traders will go and check the fundamental to have a bit of idea whether there will be a trend. So this is about those market participants that are looking for, that are investing for long term. So what I just said is this, that if you see a trend one day, all right, first wave, second wave, third wave, fourth wave, fifth wave, understand that those who generate the trend, the first buyers of the bullish trend or the first sellers of the bearish trend, are long-term traders, are long-term investors. So they check the market environment, they check the fundamental, they make decisions because of the long-term fundamentals. So when you see a scenario like this being formed, you want to check the fundamental, you want to check the market environment and see whether in the future is it likely, are we likely to see a trend in place? So this is how those first buyers or first sellers will come into the financial market. So when you are analyzing the first Elliott wave, or you are trying to identify the first wave, or when you recognize the first wave, remember that the originators of the first wave are long-term investors. So you can have a bit of idea whether the second wave is likely to cancel the first wave. If, for instance, we see the first wave in place, and then we look at the market sentiment, we do a bit of due diligence, and we see that, no. I don't think that there will be a bullish trend for this, because of this, because of that, the current market environment. You can have a bit of idea that the second wave will cancel it, which means if those are not sophisticated long-term investors, the second wave will cancel the first wave. It's likely to cancel, which means it's a premature first wave. One more thing I need to give to you, talking about first Elliott wave tips, is that whenever you see the first Elliott wave, all right, always be ready, have this thinking that the second wave may cancel it. always remember that the second wave can cancel the first wave. It can cancel it. And we will be forced to start counting our wave again. Because a first wave can be premature, right? Which means people make decision for long term, but it's not a valid decision. The second wave will cancel it. Now, conditions are now rife. Everything is now good. Now a new first wave is in place. So whenever you see the first Elliott wave, that's why if you want to trade Elliott wave, generally Elliott wave traders prefer the third Elliott wave. So the first wave is in place. Be very patient. You are not going to miss it. Be relaxed. You're not going to miss it. Be patient. Because the second wave can still cancel it. So after the second wave is in place in an orderly manner, and you check, okay, the fundamental, because without a strong fundamental and a viable market environment, there won't be any third Elliott wave. You are likely to catch the third Elliott wave. So those are just few things that you need to pay attention to when you are analyzing the first Elliott wave. All right, can be premature first wave, and the second wave will cancel it. All right. As you can see on this chart, the Australian dollar Swiss franc has been went up. You see here was going up. Okay. Now there was a correction that has cancelled the previous move. Now we see a consolidation. What is coming to our mind is that maybe soon we'll see the first wave. Talking about first Elliott wave tips and tricks. Draw the resistance ahead, because the first bullish Elliott wave is the signature of the bull and must break resistances on the left hand side. It is also the wave that breaks out of the consolidation. The next tips is that when the first Elliott wave break out of the consolidation, do not forget the trend lines ahead. Think of the trend line too. Don't focus only on the horizontal resistance level. All right. That will do for today. If you have any question or suggestion, okay, put in the comment section. And in due course, I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon. We are the TSTWSYS008 traders, talking about first Elliott waves, tips and tricks. Happy trading to you all, and speak to you soon.